let's get the day started with our special guests from the Chairman and CEO of Guardian Capital, George Mavroudis, as well as Paul Brown, Chairman and CEO of IDC Worldsource, and Phil Marsillo, President of IDC Worldsource. Welcome, gentlemen. And George, would you like to start it off?
Thanks, Greg. And it's a pleasure to be with everyone today, although I would much prefer that we were all in person. And I look forward to sometime in the near future where we can all be together and breaking bread and having face-to-face interaction. I'm just extremely proud of what the team at IDC Win has done over the last couple of years during very difficult times. And we couldn't have done that without the support and the commitment from our advisors that have chosen to do their business with IDC Win. It has been an incredibly difficult time on a mental health capacity and from a public health perspective. And I know many of us are feeling a little bit more grumpier these days as time has gone on with respect to COVID. But I do remain extremely hopeful that we're actually much nearer to the new beginning and a new dawn, and look forward to a very exciting 2022 year when we can resume our lives. I think I'll keep my comments very short and let Phil and Paul join me, because we hope to have a bit of a free for interaction and discussion amongst us and answer some of your questions. So I look forward to the participation and enjoy the next couple of days.
Yeah, I'd like to also, thanks, George. I'd also like to welcome everybody and thank you all for the business during these 2 years, forever, but these 2 years, I know it's been particularly difficult for all of you as advisors and for us as well. Like we like to engage with people directly, but we've had to adapt. And so I think the whole industry has been resilient. I remember last year when we had this meeting, I said, looking forward to seeing you this summer and in winter. This is the last time we'll do one of these events this way, but here we are a year or two, and hopefully this is going to be the last time we do this to kick off the year. And looking forward for the next 2.5 days, I want to thank you again as the advisors, all of our staff, and in particular as well our carriers. That, we partner with them, and without them this would be very difficult to put on. So I'd like to thank them as well. And as Greg has mentioned, we have 2 really good keynote speakers, one today, Brent Lemansky, and then Dr. Robin Defoe tomorrow, Henley Defoe. So we're looking forward to that. What I'm also going to encourage you is there's a chat box at the bottom of the screen. If you type in some questions, we're going to try to get through all of them. I'll try to moderate as best as I can. And if we don't get back to you, because there's a number of questions that come in, we'll make sure somebody gets in touch with you. So let me pass it over to Paul, and then we'll start on the Q&A. Paul?
Thanks, Phil, and thanks, George. I got up this morning, I literally had to dust off my suit. So here we are. I guess that's a sign of the times, but just to echo what's been said, welcome to 2022. Thank you everybody for your support during these unusual times. But we've, I think all together, we've been able to kind of continue to do business and to function and to serve Canadians well. So just like to thank you for your business. Thank you to our company partners. Really looking forward to the next couple of days and looking forward to the chat that we're going to have right now. So thanks a lot.
So as we kick things off, George, do you want to give us just a little bit of a highlight from a Guardian perspective and how Guardian's involved, what they've done with the community, how these last 2 years have happened as well? I think our advisors understand the importance for IDC having a strong backer and a strong parent in Guardian. So I'd like to hear from you, if you can provide some comments, please.
Sure. Just last week, in fact, Guardian celebrated 60 years in existence. The founding partners started the business back in January of 1962. And here we are 6 decades later with Guardian having grown its financial services, which includes IDC Win, a big part of its business, but also an organization that's grown on a global footprint as well. I think if I look back at the 6 decades and going forward, it really positions who Guardian is. There are a lot of words that I use to describe our philosophy in doing business, but the bottom line is whatever we do, we want to be authentic in what we do, be able to live up to our commitments. And in doing so, we do it with a great interest in putting our clients first. And as well, while we do that, we recognize, it's interesting in today's environment, everyone talks about it because it's become the norm. But I feel like Guardian and its founders before us that have come before Guardian have always behaved in a way where they wanted to give back to the community. We understand our role that we play, and we try to do our best. There is no shortage of things to try and help out with, so we try to stick to things that we can, and they tend to be really grassroots oriented within our communities where we can make a difference. So Guardian has been active on a number of fronts, whether it's been helping with people that are in need of food and shelter, whether it's the Canadian Food Bank, improving people's lives with giving them more opportunity in terms of educational assistance and the like. We try to do our best, and we will continue to do so going forward. And I think that speaks to, I'm sure, how many of our advisors position themselves within their communities. And so Guardian is very proud that we have the association with an extension of people that span this country from coast to coast. I think we're very proud that IDC has developed over the last 10 years under our ownership, with the leadership that we've provided at the executive ranks, to being the premier dealership in the country. We're very proud with that association, and we look forward to cementing and improving on that position by continuing to do better year after year. So I'm not sure if those are kind of motherhood and apple pie kind of statements, but I just want to let you know that we're extremely proud of our association with IDC and its position in the community.
Yeah, thanks, George. Yeah, to some degree, but I think as advisors in the communities that they represent, right, they like to hear that as well. Like, they want to be part of this bigger team as well, and something they can be proud of who the organization is. And speaking of community, I also want to take this opportunity to welcome from last year that new people to our organizations. With the acquisitions we have done in Quebec of Oria, the Kopilov agency, as well as the AFL. Some of the participants, this is their first session with on the January launch of the year with IDC. So I want to reach out to them as well, because they're covering all parts of Quebec as well. So we are a major presence in every province pretty much. And Paul, from your perspective, what have you seen happen in our business in the last, let's call it 24 months, pretty much? March 16th, I remember, is a day when we went into a lockdown pretty much. So how have you seen the business?
Well, I think the business has done extremely well. If you went back to March 16th, I think it was March 17th was the first day that I came into this office and turned on my computer and wondered what the future held. But I think we've seen the insurance business has been able to pivot very quickly to being electronic. And I think that insurance companies have adapted well, which has allowed our business and advisors to continue to do business efficiently with clients. I think also one of the good things of the pandemic is that it's given people time to sort of sit back and look at their financial situations, and to make decisions that maybe they were putting off. So in many ways, the business has accelerated. I think advisors have adapted extremely well, and 2021 was, I think, IDC wins best year by a landslide, and I think most advisors and most MGAs and most insurance companies have done really well during the last couple of years.
I would agree 100%. And I think, and George, from your perspective as well, you oversee the whole of the Guardian, the IDC, the wealth management business, et cetera. What would be one of the things you've noticed from, based on feedback, your interactions with different advisors, in how their business has changed a little bit? And how do you see that going forward? Like, I think like digital playing a role, but I mean, digital is not the all and be all. Like, I'll give you from my personal perspective, I don't think digital will replace the human being. I think the key will be how we interact digital with the human being, and then help advisors.
Yeah, absolutely, Phil. I mean, digital has always been put out there as a threat to the advisor and the industry at large as being disruptive. And what we've witnessed is that actually digital for it to be best utilized actually to be as a tool with the advisors. And that's where all of our efforts have been around, trying to bring in that digital capability to enhance the capabilities of our advisors. One thing we've seen, we've gone in the last 2 years in a lockdown, more or less, where everyone's kind of been limited with their ability to travel and be out there in day-to-day interactions in life. And yet, I think what we've seen from surveys and discussions and the like across all aspects of financial services is that advice is more important than ever. And that is the role of what the advisors have in that relationship with their clients. And technology itself cannot replace that alone. And so that's why I think our advisors are probably doing well over the last few years, is that it's offered them even more of an opportunity to engage with their clients. And if we can provide them with improved tools to make their practices more efficient, it allows them even more time to engage with their clients and provide that advice. So, I think there is no doubt that the threat of everything going to automation is not going to happen, certainly not in the insurance side. The one other thing I would add is that, the last 2 years, my observation is that obviously we've seen huge asset inflation across the board, whether it's, the stock market, private asset collections, real estate, collectibles and the like, real estate across the board, both homes, houses, commercial and the land and land. To me, this bodes extremely well for the insurance industry, because the best tool out there to deal with the asset inflation that has occurred and the pending unprecedented amount of wealth transfer that we're going to see over the next decade or two, the best tool available is insurance. And in order to try and transfer that wealth efficiently. So I think I'm very bullish on the opportunity for this segment of the business.
Yeah, thanks for those comments. I think when you look at that as well, and you start to see some of the learnings from my perspective during this pandemic is that, to your point, you use digital where before having a conversation like this would be a no-go, right? And from meeting with an advisor, meeting with a client online, there was still the fear in the industry that it's not considered a face-to-face interaction. In reality, I see you, you see me, we see the attendees, they see us. What more do you want? We're not physically in the same room, but we do the oversight of that. And I think from an advisor perspective, although you're not going to run all your meetings this way when you get back to normal, I think you can probably shift part of your business, like when you're doing your annual reviews or your quarterly touch base with your client, you might want to do this online. And there's some of the functionalities where you can record the session. And from a compliance perspective, you can just drag it into your CRM and it's all there, right? So it's a benefit, and you don't have to travel across like for people living in Toronto, particularly, I'll speak to that from a traffic perspective. The 2 hours you save going to and coming back, because you have to plan ahead because of traffic, you can probably have 3 meetings, 4 meetings. So you become more productive as well, right? Well, like Vancouver, I know is a little bit different there because you guys have a real hockey team, and so getting around is difficult and people are watching the games, right?
We don't have any goalies, but we have a real hockey team, right?
So some of the, from advisors, right? So we pretty much, like most industries and based following science, following government, I guess we've closed our offices and they've been off base. When we see this reopening, because we did have a plan to reopen in January and it's February and go gradually, how do you see that evolve? I know it's fluid. There is no right answer. There isn't one size fits all. And every part of the country is very different. So if we were to take out our crystal ball and start looking, what's going to happen in 3-4 months? Like any insight here from anybody want to make a comment? Paul, George?
Well, that's an interesting question because I think the one thing we know is that we don't know. But that being said, we're hopeful that things will start to evolve. I would see that, our goal obviously is to get our people back in our offices and at some point to get back to probably what will be a new normal. But I think what we've learned through the pandemic as well is that we can operate in a kind of a hybrid model, and we can be effective. So, I would see hopefully in the next few months, we start to migrate back to our offices. But at the same time, we'll continue to have some flexibility in terms of how people transact business. So, we do have a lot of real estate. So, we want to get back and utilize it. And I think one of the main problems with being remote is that we lose that interaction both internally with the staff and also with advisors. So that, I think the main benefit of kind of getting back into the offices is that interaction. People that are new to the organization need that in order to learn the business and to become more effective. So, hopefully in the next few months we'll start to do that.
One of the other questions that we got online here is, as we start to see, this risk of inflation, higher interest rates, what do you see as and maybe one, George, you can comment, the other one, Paul, you and I can take a stab at this one as well, is from a interest rate impact to the markets. Like we've seen it's a good thing I have gravel. So with the roller coaster ride we had yesterday on the markets, and I think today is similar. How do you see that impacting with the higher interest rates? If it's short term, lots of increase in rates, short, and also from a product perspective, well, you and I can take a stab at that one on the risk side.
Well, I mean, everyone is, been watching what's going to happen with the rates for some time, and clearly everyone is expecting some rates to increase over the next 12 months. Predictions are the Federal Reserve in the U.S. is going to have at least 4 increases this next 12 months, and Bank of Canada, I think tomorrow, may be raising rates. We've been spoiled with low rate environment for a long time, which I'm sure has created this asset inflation that we're experiencing. It will be rocky as we try to get back to more normalized rates. I'm not an economist, but my prediction is actually that we will probably see rates hit a ceiling maybe sooner than people might expect, because I think it will be a hard adjustment for the economy. And so, maybe we don't have to look too far to kind of see what history has shown us, and that is in Japan, where they're still trying to get rates back up. Here they are 30 years later with low rate environment. So, I think, but I do think the rate environment will be a big indicator to what happens to other asset classes overall. I think just for the insurance industry as a whole and financial services, higher rates will be better for the insurance industry and the financial services and banks, at least moderate raising of interest rates, because it will allow them more of an opportunity to have a higher margin, and and maybe also for the insurance companies discount their liabilities a little bit to a lower level with rising rates.
Yeah, and I think from a product perspective as well, right? From on the insurance side, I think on the longer term products. So you look at T100 level cost of insurance and the UL and PAR impact to the SIR rate. We've seen one of the carriers just recently announced that they're maintaining their DSIR going into 2022. Other carriers will be announcing. I think there's a positive there with the higher interest rate as well. Well, do you see anything on pricing from your perspective you want to comment on, or?
Well, it's more from historic. Phil, you and I were probably around back in the 80s when interest rates were double digit. And one of the mistakes I think that was made by the industry was that they reacted to that, and they got away from products that kind of had a PAR product that has a smoothing view and a long-term view of interest rates in the market, and started to price products based on high, new money rates that were high. And those were probably the worst products ever sold in the insurance business. But clients who thought they were going to earn 10 or 12 are now earning 0 or 1% on those products, right? So I think one of the things we need to do is not to overreact to the change in interest rates. Some of the products like PAR reacts to lowering interest rates gradually, and we'll react to that. If interest rates go up, we'll react to that gradually. But I think we have to keep a long-term view. That's really what our products, when people are buying our products, they're not buying them, they're buying them with a view that they're going to be holding them for 20, 30, 40 years. So I think that's important. But at the same time, as George said, I think it's really good. It's actually good news for the insurance companies, because low interest rates are one of their biggest challenges. So I think If it helps the insurance companies, it's going to help the insurance advisor.
Yeah. And I totally agree. I think when you got to look at this, our products are long term, right? And when a client is making the purchase, they're looking at things, that's going to deliver 10, 20, 30, 50 years into the future. And you want to make sure there's stability there and that the products are priced accordingly as well. So it's critical. And rates will stabilize. I think you have to look at it long term. You can't be just chasing the short term return of a product and focus on one area, whether it's the DSIR rate in itself. It's what's the history, what's the consistency, what's the deviation of it, how's it performed over time as well. Another question that's also come in online here for this chat box has been, given all the information that's online today from a financial perspective, like it's just inundated and people just put out some comments out there as well. There's that, what I like to say sometimes with my wife as well, we have the conversation. She goes, I read this online. And my comment is always, well, if you read it online, it must be true, right? So given all this information that's out there, what do advisors need to do to enhance their credibility and engage with this new generation that wants to get advice online, that's seeking for that advice? So how do they distinguish, what do advisors do to distinguish between hearsay and as a professional, what they can provide from a value add? Any comment there?
Well, it's not too different than, even before digitalization was there. Like, how do you get, reputational respect amongst the client base out there, the public? And that is, I think, delivering, first of all, sound advice and content. And, we talk about being able to have meetings like this, and I think that's fine with a lot of relationships that you already have. There's a trusted relationship, so you can intermingle a digital interaction with the in-person interaction. But when you don't have a relationship, you're trying to build the first level of trust. I think this new generation is far more likely to go online to source its initial impressions of you. And if you can try and populate whatever presence you have online with good solid content, then I think you're starting to build that brand. And I think all three of us on this call, we're of a generation that's a little bit on the older side, so we got to be careful that we're not making judgment calls based on our own experiences, but we listen to our colleagues around us that are younger and telling us what to do. And things like social media applications like LinkedIn are used increasingly by people to network and present themselves, or other social media. The question always comes back down to, what is the quality of the content you put out there? And be careful that you think about what you put out there, because unlike in the past where you didn't have necessarily a record of it, now there's a record that's there forever, and you got to be careful that you don't want to be embarrassing yourself.
Yeah, I agree. And I think also as well, I'd add is source your information. Like, it doesn't, like, you don't have to comment as an advisor on every single thing that gets said online, but get some of your sources referenced, whether it's from an economist, from a reliable source, like from us if you want, from our carriers as well, so that there's somebody else backing. It's not just something you thought of, and you get out there, and posting isn't like, you shouldn't be doing it every day either, or every 6 times a day either, right? You got to pick your spots, because I think from a credibility perspective, from some of the research I've seen, is that's what they're looking for. And later today, Brent Lemansky is going to provide a little bit more feedback on this whole online and how it helps. And if you use some of our experience as well, like one of the things that we've learned in Quebec in particular, and we're starting to do, and it's not available for everybody, we're going to manage this, it's this whole lead generation system and how we can create some leads for advisors, right? And so there's a whole process. Like, these leads aren't just like, give me a lead and I'll deal with them when I can. There's a process behind it. The follow-up, we're on top of those advisors, and we're piloting in the rest of the country. And the success rate's been pretty good. So consumers do go online, they do their research, but then they want confirmation that they've understood it correctly. So they rely on the professionals, the advisors as well. So I think that's what we face. That's what we've seen. Another question that we've seen as well is, they've talked about, and I guess it's probably along the same line, where in the past year, the industry has moved more to a digital environment with the apps and digital policies and virtual meetings. And as security from a compliance perspective, do we see the world evolve where we'll have an app, like as opposed to trying to go online, you get your information through an app, and because there's a little bit more security there. I think from a carrier perspective, what we've been told in some of the conversations, that they're looking at that avenue because it is more secure, more easier. And, you know, to George's point, and Paul, you're in the other range of the where we are with age band, but the younger people are so apps everything, right? I mean, I look at my experience. I don't know how many apps on my system, on my phone. I'm not sure I use every one of them though. No, I don't. There's some of the key ones. But you see app coming into the play in our world as well?
Well, I would, it's not really my area of expertise, as you just pointed out, Phil, but I think, you know, the insurance business has been slow over time has been really slow to adapt. And as we said earlier, you know, the pandemic kind of forced insurance companies to step up and do things that they maybe, not that they didn't want to do, but they just hadn't gotten around to doing or finding a way to do. So, you know, I think that one of the things incumbent on the insurance industry is to continue to adapt and to modernize. So I would say that, and this whole issue of security of data is, you know, that's a big issue for us and a big issue for advisors and a big issue for insurance companies. So I think you will see some of these things evolve.
As we're wrapping down, I think the day is fully charged. One other question that's come in a couple of times, and I will address it. It's regarding conferences, and you know, there's been a couple of conferences that advisors have earned their way. We've postponed them for the right reasons, because traveling has been challenging. You know, question: will we finally have a conference in 2022? So you know, that's a plan. I think from my perspective, we're hopeful. That is, we're working towards that November of 22 to get out back into Florida. That property, we've pushed it. It's our third time there now, basically from the initial. And we also said we were going to try to do some, for those that qualified the last two conferences, to do some other kind of a reward trip somewhere at the start of 22, but given where we are, we're not doing it. We're just postponing it. We haven't forgotten. We're still committed to it, at least. And so maybe, you know, Paul, George, if there's anything you want to add there. Well,
what I would add is that I'm really looking forward to the next conference myself. Like, I think we all deserve it. It's a very, very difficult issue because of the, you know, things just continue to evolve, as we've talked about, and it's so hard to predict. And it's such a big project to try to organize a conference that, you know, you need lead time and you need logistics. And so it is complicated. I'm very, very hopeful that we'll be able to get together in the fall of 2022, really looking forward to it, and very hopeful. So, and look forward to seeing a lot of you there. So.
Excellent. I think so. This is from a timing perspective. I just want to thank everybody and thank George and Paul for your time and your commitment to IDC Worldsource, and to the, more importantly, to the advisors, because at the end of the day, we exist because of advisors. So with those comments, I'll just do one little round. If there's anything else you'd like to add, and then we'll pass it over to Greg.
Well, just to reiterate, and don't want to sound like a broken record, but thank you for being with us today. You know, it's been as we've said, it's been an interesting time. I think everybody has done very well during the last couple of years. And please stay healthy and safe, and as we continue to work through this. But you know, again, thank you for all your support. We really appreciate it, and look forward to seeing you all at some point this year. So thanks very much.
And I would just like to close off by thanking everyone for, as both Paul and Phil have mentioned, for your ongoing support of IDC Win. I'd like to thank all of our employees, all of our executives who have been working hard from remote places. And I'm not only thinking, I am certain that we will all go back to our days where we can interact in person, including conferences and people back in the offices. I think we've all found out that after 2 years that by and large, human beings like the personal interaction, and we might be able to use these digital tools, but not 100%. We want to be face to face and be able to have that intangible that you have by interacting with our colleagues and our friends in person. So I know it's been a long journey. It's been tough to keep our spirits up. But I do really believe that we're getting close to that new dawn, and I look forward to better days ahead.
Yeah, thank you, George. Thank you, Paul. And again, from our perspective at IDC, we are going to continue with some of the learnings from this pandemic. And so we will continue to provide monthly, weekly events online where you can register and get your CE credits as well. We also have our Win Big site where you can go get some CE credits. And I think Greg and others will talk about that. And throughout the year, as soon as we can open, it'll probably go into a hybrid model where we'll have run some events in person and some other events we'll continue to do them online. And so looking forward to 2022 and meeting all of you in person. In the meantime, I'll hand it over to Greg. Thank you, Paul. Thank you, George. And
Thank you, everybody.
Thanks, Phil. Thanks, Paul. Thanks, George.